Greetings, my fellow crypto traders. Yes, I look different. I shaved my beard. Not very Studamus of me. I now look like I'm 17, but just, I guess, in a moment of spontaneity, I decided I wanted to shave my beard. I don't know. What can I say? Friday, September 23rd. The other bit of news I have for you. I contracted something this past week, and I have a feeling it was COVID, though my COVID test told me negative twice, though those things are not the most accurate. But reason I believe it was COVID is it was just exactly like when I got it the first time. I was one of the first ones to get COVID when it came across the big pond in April, I believe, of 2020. And when I contracted it, it was just kind of a minor annoyance, not really a big deal at all. I'm not downplaying COVID. By the way, I know that many, it affects many seriously. But for me, it was just a minor thing. I was working out in my driveway, of course, because everything was shut down, repping heavy deads and benching and squatting and doing all those things while I had COVID. This one took me out. I mean, honestly, I probably shouldn't have gone to the gym on Saturday when I was feeling like it was starting to take over. I thought it would help me to feel better, but I took up all my energy to repair my muscles rather than fight this thing off, and therefore contracted it. And it has gone to my lungs, and therefore I have asthma flares. So if I have a asthma spasm on video here, I will try to put you on mute so you don't have to hear me cough. It has been affecting my ability to speak because I just end up coughing many times during one of those fits. And yeah, I should be probably taking an inhaler or something. I got diagnosed with asthma like 25 years ago. And really, I found the best thing for it has been just to put in some good cardio and work it out of my lungs. And then I can get rid of the cough and I'm on my way again. I'd rather do things in terms of healing as naturally as possible. But that is neither here nor there. What we're here to talk about today is this dollar. And I am going to really just exclusively focus on this today for those reasons. Number one, because I don't want to end up having a whole video where I'm coughing in your ear. So we're not going to talk a lot about the context. We're not going to talk a lot about disinflationary data, nor are we going to try to project or predict Fed future hikes. All I'm going to look at today, instead of talking about some of the fundamentals, I'm just going to look at the technicals. All right, so here is our dollar chart, and I've discovered a new line here. I'm going to take us to the weekly, and then I'm going to zoom out here. And I want to show you, put it in auto. I've been saying since really 2009, we have been in a secular bull market. And we can take a look at that on our SPY. You can see I have the line here. Starts almost exactly the same time. There I go. As I've drawn that line on the dollar chart. All right, this is March of 2009. And since March of 2009, we have been way above this trend line. Actually, more recently, way above it. All right, only broke down below it once, and that was in 2020. 2020, really, you can always throw that out. It's just an anomalous event. It really doesn't count historically for anything in terms of charting. But we have always remained above this trend line in our secular bull market. And so for us to really come out of this secular bull market that I believe we are still in, we would, on the S&P, we'd have to come down below 3,000 points. All right. And I believe that will happen eventually, but not yet. I'll tell you why. All right, so dollar, the same thing. I started to draw this trend line in February of 2009. All right, we hit this trend line the first time here in February 2009, then again in 2015, and then let me move this out of the way. Up here, we hit this in 2016, November, December, no, January 2017, somewhere around there, end of 2016, 2017. And look at this, guys. We're approaching it right now as we speak. Today, we are about to touch that thing. I believe once we do, we are not going to just break right through that. That rarely, if ever, happens, okay? Unless there was some geopolitical situation, and of course there is one going on, this war in Russia and Putin threatening nukes and everything like that. We will not just break through this trend line. I can almost say that with, like, I can say that with a great amount of confidence. All right, so we have broken through a couple of these lines of resistance. These are less significant, all right? What is most significant here is this purple trend line, because what it means for the market and market psychology is if and when we were to break through the top side of this purple trend line, that would put us, that would be a lead indicator that we are now entering, or we will soon be entering into, from the secular bull market that has lasted 13 years into a secular bear market. And those things can last just as long, guys. And so it's not a, it's kind of a critical and dangerous situation where we're at right now. Now you can see that this black trend line is acting as a very good resistance as well. I do think that we could pop back, we could pop above that very quickly, like a day or two, touch our trend line, and then come back down. All right. I don't think we're just going to break through both of those trend lines, those areas of resistance, without repercussion. In other words, the dollar will recede from those points if I'm seeing this right. All right. Let me just show you real quick. Hopefully I don't cough in your ear too much, where this black trend line comes from. All right. So this is, I've got two trend lines here. One is a little bit steeper than the other. What we're looking at is this trend line right here. I started to draw this from December of 1982. Now, if I were to zoom in, I'm not going to do that right now because it takes a lot of time to zoom in and scope in. But all of these areas are very significant levels. And you can see once we broke above this trend line, it was just massive climb on the dollar. All right. And then once we broke below again, it was just a massive drop. So that confirms the significance of this trend line that comes back multi-years and decades even. All right. So let me get rid of those. And you can see over here in 2001, 2002, we touched that again. All right. And that descent continues to where we are right now today, coming up into that area of resistance on the dollar. Again, this may be enough resistance to prevent us. Look at this. It keeps trying to break above that. It may be enough resistance to prevent us from really touching this purple trend line. I think that what will happen, though, is I do think we will go up and at least kiss that purple trend line real quickly before the dollar starts to recede again. All right. So that is my projection of the way this is going to play out from purely a technical standpoint. Now, this is aligning, or it's corresponding with all the other technical data I am seeing on the charts. I'm only going to go over a couple because of my asthma issue and I don't want to be coughing in your ear. But look at this, guys. Not only is the dollar up there into that resistance, but the VIX has done exactly the same thing. Come up, and it has almost touched the top side of this megaphone pattern, this bullish pattern. All right. I do expect that once, if and when we get to this purple trend line, that will match precisely what I'm seeing here on the VIX, where we touch the top of this trend line, this megaphone pattern. So that data matches, all right? And by the way, guys, this area up here is right around 113.6 to 114 on the dollar DXY chart, all right? So you want to map that out, all right? Get rid of my circle here real quick. And then I'm going to jump over here to the SPY and show you what I've got here. On the SPY, we have broken below this triangle, all right? This was kind of surprising to me. I really didn't think the bears were going to take us this fast and this furious down. I mean, that 75 basis point was already factored in. What the market is reacting to is the way that Jay Powell and company articulated their comments regarding future rate hikes. All right, they were very consistent in saying they are going to tackle this inflation problem. So the market is trying to price in, you know, another 1.25 or so before the end of the year. Now, I have been mentioning that I think Jay Powell and company will, at some point in the future, pause to consider the leading indicators, which is not the CPI, but some of this disinflationary data that I've mentioned in past weekly posts and that I've been posting statically on my site, mostly to Twitter. I'm posting more to Twitter, as I told you all in last week's video. So if you want to get all those tweets and retweets that I post out there, you got to follow me on Twitter. I'm only doing that because Substack still does not have an Android app where you can just get a push notification to your phone. iPhone has that, but Android does not. So I don't want to be annoying people with Studama spam with every little post that I make. But you can see here on the SPY that we are forming, and it remains to be seen whether this will play out this way or not. But we are forming what appears to be a double bottom pattern, or W pattern, all right? And if I'm right about this blow off top, this data also corresponds. So we have good support down here, all right? Very good support at our previous low on SPY, which was 365, all right? And all the rest of my S&P charts look kind of the same. All right, now you can see here I have an ascending trend line that we have come down to. It looks like we're trying to break through that, but the market has not yet confirmed that. You need another candle opening and closing below this trend line for confirmation. So far, we can say that data matches, and it looks like it could become a double bottom pattern. All right. I'm not going to talk a lot about the blow off top that I keep mentioning in this video, only because of my situation with my cough. But, you know, stay tuned. I'll bring that up next week if I'm a little bit better. US 500, same thing. These are all S&P charts. We have come back down to support. All right. I was surprised that we broke through this area right here. I was surprised that we then broke through this area. But I think the market is just factoring in the hawkishness that Jay Powell articulated during his, what is that, Wednesday afternoon at 2:30 press conference. And by the way, guys, he did mention, if you were listening closely, he did talk about pause in the future, where, though he never mentioned when, but where he is going to evaluate and analyze all of this disinflationary data that really leads the CPI report. All right, the CPI report is really a lagging indicator. And as I said in one of my past videos, inflation continues to come down. I mean, we started at 9.1, we went to 8.5, and we went to 8.3. So it is coming down. Maybe not as fast as the market expects. And maybe that's why the bears have really taken hold of this move down. And we missed CPI data by 0.1%. And you look how reactionary the market is because of that. So really, this fear index is precise. It is measuring the amount of fear in the market. And just one little miss like that causes the market to really react in an insane way, in my opinion, because CPI does not accurately reflect the disinflationary data that is coming in hot and heavy. And I mentioned this in my past videos. I mean, we have oil coming down. I could jump to these charts as I'm talking to them. I might as well. Oil has come down below this channel and below support and continues to come down. That is heavily factored into the CPI report. And we have gasoline futures here coming down below a significant trend line that, again, this has started all the way back in March of 2020. All right, we've come below that line. We talked about housing, U.S. Housing starts, rent. We've talked about freight. All of these data points are showing us massive disinflation is already in the way. And as I've said before, some of this data is not factored into the CPI report until 6 months in the future. For instance, rent. All right, we won't even get rent numbers till the CPI report next year in March. That's when it will be accurately reflected. So you have to think that at some point in time, Jay Powell and company are going to, take a step back and just look at all this data. If we attribute to them the best of intentions for the U.S. economy, that's what they will do. If they continue to just blindly raise interest rates, all whilst this disinflationary data is coming in hot and heavy, at that point, I have to take a step back, and I don't believe in the conspiracy of stupid leadership. I don't believe our leaders are stupid, though part of it could be true. All right, they could actually be stupid, but more often than not, it would have to be at that point maliciousness. All right, and an intent to bring the economy into serious recession, if not all-out depression. At the very least, we will be entering into a bear market. This secular bull run that I keep talking about, and we are still in, will have ended way down here. We'll cross this threshold and enter into a secular bear market, which could last for 10 years or more as well, just like this bull run. Everything cycles, guys. You got up cycles and you have down cycles. We do swing trading, so our cycles are very short, and I mainly monitor the daily charts. But overall, this secular bull run will be ending at some time in the future. Good things don't last forever, and we've been in this secular bull run since 2009, so for over 13 years here. It's coming to an end soon. My anticipation, though, is before it comes to an end, we have one more blow off top, which I will talk about in another video, not here, not now. Anyways, guys, the big thing is I just wanted to cover this dollar chart, because that's what it's all about. This is where you guys should be focusing. What happens with the dollar affects the broader markets, affects cryptocurrency, affects everything. And that's why I study this so much, all right? I want to know what the big picture is so I can prepare for it. And if you, my viewers, are all prepared for the same bear market that I'm seeing, it will only leave you in a better position. But before we get that bear market, I do believe the dollar is going to turn around and give us a little bit of a break, at which point maybe we get that blow off top that I'm theorizing, I'm speculating at this point that we will get. All right, guys, that's it for me today. Hope you enjoyed the video. And if you did enjoy the video, please give me a like and even subscribe. That only helps me to further propagate these videos for others so they can view this information as well. And it encourages me to put out more content like this. All right. So I appreciate y'all. You guys have a good weekend, and we'll talk to you next week. Peace.